Welcome to simpleroptions.com. My name is Don Kaufman. Here we are on November 11th, 2015. It's a much slower market day, of course, observance of Veterans Day, where the S&Ps and the equities have just closed, but bond markets have actually been closed in the trading day, making it again a much slower day than usual. Really, the goal this evening is to get you looking towards the spiders, the IWM, the Qs, and simply ask the question, have we actually seen short duration top over here? So inside of the spiders, and you can use the spiders, you can use the SPX, you can use the IWM, which is the Russell 2000, okay? You can even go ahead and use the Qs if you want, which is the NASDAQ. But everything is really going to set up the exact same way. And it looks in the short duration here, we may have peaked out, come back off. However, taking a look at this, it's kind of my belief, even if we see some sell-side activity, I think right now is an opportunistic time to kind of push a little weight into a rally, possibly later this week. That is, if we bounce off the current levels here of the 2080 level inside of the S&Ps, and we bounce anywhere, okay, near this 2100 level. Again, that's only about 25 points away. And if you take a look at the SPX, the expected move, okay, has about a $19 expected move. That's left for Thursday and Friday this week, okay. I think at this point we do have, all right, the sellable rally, and that's the rally that began all the way back here in the 1880 handle, shooting all the way to, that's right, ladies and gentlemen, 2120. So we've rolled off some of the recent highs over here, and the slippage is a little bit more than I think a lot of people realize, because we've been sliding, 8 points this day, 10 points this day, very gradual kind of decline. And to get these kind of gradual declines, we may get a nice little hurrah to the upside, but I think we've got in place a nice, okay, sellable rally over here. And that's exactly what I'm going to look for on Thursday or Friday of this week when I say, hey, you could sell into it here. Any bounce you get, okay, that's coming towards the 2100 level, I'm going to look to sell markets at 2100. But I'm still going to do it at this point, okay, with kind of a tepid response. I'm not going, all in. I'm not shooting for the stars over here. All I want to do, okay, is get an effective position on that I can have some longevity into. And if I go over to the trade tab, that means I'm going to define my risk, I'm going to use options, and I'm going to use a little bit of duration. Okay, this is a trade that I might look for from anywhere from 23 to 30 days out. And when I construct these types of trades, okay, there's a lot of different things you can do. However, the volatility right now is low, so let's not get too cute. Let's not go out there and sell a bunch of volatility, because if you take a look at where we are in terms of volatility, and I'll open up option statistics, okay, we're at the 10th percentile, which means one of the lower ends of the spectrum of volatility right now. So I'm not going to get cute and try to sell option premium when there's not a whole lot of premium to sell. So the skew is also fairly significant. It's going to lead me to do trades where I'm going to negate volatility. I'm going to negate time. And I just want to show you this because here's a trade 30 days out, and it's in the SPX, the granddaddy of all the products, right? It's a 2080, 2075 spread for a 215 debit. That's a $5 wide spread for a 215 or 220 debit in this case. Even if you bump it up over here to 225, and that's what I would call a plausible price. It's a plausible price to get filled at. It's a $5 wide spread. We're trading at 2075. It's already $5 in the money trading for 225, and the reason a $5 wide spread that's in the money by $5 can trade for 225 is because there's a implied volatility skew. So if you're into it, it's a nice, soft, gentle way to want to get short. But I think you got to do a trade just like this, okay, in the midst of maybe a little bit of a bounce that we're going to get Thursday, Friday of this week. And again, we've sold off, again, kind of a tepid response here to the trade. Just go in there. We're just nibbling. Just a little bit of nibble over here. All right, in what's been an utterly quiet day here on Veterans Day. Last but definitely not least, I've got a class coming up, and this is one that there's a lot of classes that I'll do from time to time, a lot of requests, do this class, I want to do, 132 butterflies. This one, ladies and gentlemen, this one's for me. I'm doing simpleroptions.com/short. And what I'm going to explain is I've been shorting markets. Okay, I was short markets, many months ago. And when I say many months ago, 18, 19 months now, maybe even longer. Well, actually, I've been short now, even beyond that, almost 22 months. And you're like, how can you sustain the pain? I'm going to show you how to finance, okay, what I call my need to want to be short right now. And I look at markets a little longer duration, and I want to be short. So I'm going to talk about shorting markets and loving it, and how you can actually sell premium to finance those short positions. And moreover, I realize some of you guys have IRAs, so we're going to do some stock replacement strategies, because you can't get short stock inside of the IRA, the 401k over there. And if you like the idea of being short some markets right now, and that can be anything. You could be short the entire S&P. You could be short Costco, for instance. You could be short Apple. Okay, I'm a notorious short of Apple over there. And again, it's not just about, hey, I know how to get short a stock. Of course, you sell it, right? It's how to actually finance those stocks that you are shorting by ultimately selling premium. And it's a great opportunity right now because there's a large skew, and the skew, okay, makes it much easier and much more plausible to want to finance the short side of trades. With that, again, join me. It's going to be this Saturday. I couldn't pack the class into an evening. It was in 2 hours. I had to do it 3 hours. So I'm going to be a 3-hour class on Saturday. Okay, we knocked the price down given the fact it's only going to be a 3-hour class, $197. It's going to be worthwhile. Again, sometimes there's classes we do for you. This one, I'm doing it. It's just a topic I really like to talk about. So shorting markets and loving it. It's simpleroptions.com/short. Thanks a lot, everybody. Bye-bye.